That's right. And it's a bad idea, if you want a good reputation as a company, it's a bad idea to try to defraud your customers. They simply won't come back. They'll badmouth you to anyone else who might be a customer. Mm-hmm. It's bad for business to be a fraudulent provider of goods and services.
So we don't have business cycles due to different levels of greed?
No, I confront this with students very often. They'll look at the business cycle, the recent crisis, and they'll say, well, this is because bankers got greedy.
Well, they're always greedy.
Well, I tend to assume so, yes. There's sort of a baseline level of greed.
Yeah.
But
like fire, it can be used.
That's correct. It can be turned toward beneficial purposes. But normally the market puts constraints on that greed rather than seeking my own goals.
Or the government intervention fuels it.
Yes, it does. In fact, if you look at Tom Wood's book, Meltdown, which I'm always referring to students, he points out several of the government intervention, features of government intervention that contributed to this crisis by removing those constraints on that behavior.
I want to interject for listeners that they can go to our Radio Free Market archives at radiofreemarket.com, and you will find an interview that we did with Dr. Tom Woods on his book, Meltdown. And it is available for free download, and I do recommend that you listen to it because it is an excellent summary of this particular point. Okay, so let's move on actually to the next particular objection and it's my absolute favorite. That meaning I despair when I hear it, but I hear it so often that capitalism is inherently racist and sexist. What's wrong with this?
Well, there's a misconception, I think, here about episodes of American history like our period of segregation. If you look at the incentives that the market creates, employers have an incentive, financial incentive, to hire on the basis of ability without regard to race. Mm-hmm. Customers have an incentive to take a good deal where they can find it, no matter what the race of the person selling it.
Well, of course, because customers are looking for the lowest price possible.
Of course.
They want the best value for the lowest price.
And furthermore, you find that some of the battles against segregation were launched by businesses themselves. They realized that segregation was bad for their profits.
Because segregation costs the bottom line.
Of course it does.
So talk about one of these stories. You mentioned something, private transit companies down in Florida.
There's a couple of good things that have come out lately.
Tell us that story in some detail, if you would.
Yes. Jeff Jacoby and George Leaf have done some good work on this, and they have pointed out, also Jennifer Roback, I should mention, in the Journal of Economic History, have pointed out that private transit companies were fighting segregation laws or would simply ignore them. Mm-hmm. And governments were constantly trying to press these companies into following their regulations.
So the governments were trying to enforce the bus companies to segregate themselves.
Yes.
But this was so bad for businesses that the bus companies were actually resisting this.
Right. And if you look at for example, in 1904, Houston's streetcar company complained to the city government that they were being required to haul around a good deal of empty space that otherwise could have been occupied by African Americans. It was not being made available to both races, so they were losing money.
Did this happen elsewhere in the South?
It sure did. I mean, if you look at Jacksonville, Florida, in 1901, there was an ordinance that required black passengers to be segregated. It was not enforced until about 1905, and so the transit companies went on with integrated travel until the state legislature passed a law saying that you have to segregate.
So the local governments said they had to. The local businesses ignored the laws.
Yes.
And then the state government stepped in and said, you're not going to ignore this law.
Precisely, yes. And in
Amazing.
fact, it was so obvious that the transit companies were opposed to segregation that when a group of black citizens was challenging the law in court, their attorney said, well, I just want to reassure the court that we are not in cahoots with the railroad lines in Jacksonville. There was such a harmony of interests between the anti-segregationist groups of African Americans and the business owners who did not want to lose profits, that they were almost indistinguishable to the courts.
So segregation is really a product of governments, not markets.
I would say so, yes.
You made this comment also that I didn't quite write it down exactly, something about stop the competition, government.
Yes, if you look at some of the motivating factors behind segregation, you find that it's anti-competitive at its root. And often the labor unions and others would try to ban membership by minority groups because they did not want the competition. Apartheid in South Africa began partly because white citizens did not want the competition from black citizens for certain types of jobs.
Let's move on to the next one, because this number 8 is fairly sophisticated, and I want to give you a couple of minutes to get into this one, that capitalism is prone to bubbles and panics.
Yes, there's so much good literature on this now, and I'd already mentioned Tom Wood's book, Meltdown, and there's so much that shows that when we have a recession, if you look at the government intervention through lower interest rates, artificially lower interest rates by the Fed, and if you look at regulation in this most recent crisis, regulation by Fannie Mae, Freddie Mac, regulations like the Community Reinvestment Act, these contributed to our crisis by creating a housing bubble. The recession's a correction for this. And then when government compounds the error by trying to stand in the way of the correction, when the government says, well, we're not going to allow markets to correct, we're going to try to regulate even more, this prevents markets from regaining the solid footing that they need.
Now, you had mentioned Tom Woods' great book, which really focuses on the recent, that book being called Meltdown, and our interview, which we did with him on Radio Free Market. But you also had mentioned Bob Murphy's book.
Yes, Politically Incorrect Guide to the Great Depression. And Murphy does a tremendous job. I recommend it to high school history teachers and college professors who are trying to address this in a way that is not giving in to the normal myths about the Great Depression.
Well, this is an unprecedented moment on our show, but this is the first time I've plugged our previous shows twice in one show. But I'd like all the listeners to know that in our archives we also have an interview with Dr. Bob Murphy on his great book, The Politically Incorrect Guide to the Great Depression and the New Deal. And I highly recommend that everyone download that. And, of course, as I always like to say, all of our shows for free, or you can also subscribe on iTunes and have them automatically sent to you. So let's talk just a little bit more about here that how the recessions are a cleansing mechanism for the market.
Yes, if you look at what happens when the government tries to artificially reduce interest rates, when the Fed is pumping out money, trying to force those interest rates down below where they should be, businesses start to make mistakes. They start to invest in projects that look profitable with the lower interest rates. But eventually that has to come to an end. You eventually face a choice between hyperinflation or a recession of some kind that purges those bad investments from the system. So the recession is really a process of reallocating resources from the projects that now people understand never would have worked with normal interest rates. But when those interest rates start to go back up, those resources start to go to where they should have been all along. Now, some businesses are in trouble during this recession. Other businesses will gain those resources, and they will do relatively well. But I've compared this to going through some sort of recreational drug withdrawal. You face this choice of either damaging yourself further with the drug use or going through this painful process of withdrawal. It has to happen at some point. The more you postpone it, the more you try to create money and keep those interest rates down, the worse it's going to be when the recession finally occurs.
And it eventually will occur if it's artificially induced on the upside.
Of course it will be.
And this is why Doug French likes to say that the real problem is the boom, not the bust.
Yes.
And understanding how the boom is created. So, folks, we're coming into the end of this particular segment, and we'll be back after our break. This is Radio Free Market. I'm your host, Michael McKay, and we're talking with Dr. Timothy Terrell on the 10 common objections to capitalism. Please stay with us.